Hello and welcome to MasterChartsTrading.com market recap for the weekend on Friday, May 22nd, 2015. This week, major indices hit new all-time highs and new all-time closing highs. Market breadth for the major indices is somewhat uninspiring, but still an upswing. ASHR, ETF for a Chinese stock market, hit a new high after a 40+% move. It's obviously very overbought, but very bullish at the same time. On the opposite side, a solar ETF 10 gapped down about 10% this week, and we'll look at the importance of a diversification within a fund. Bonds begin a rebound but are still somewhat weak, and we'll also look at gold, oil, and natural gas, as all of them went on our short signals this week. Okay, let's look at stocks. So this is a S&P 500 large cap index chart. So let me move it up. First of all, this is a chart right here, and around it there's a bunch of indicators. First of all, this is a bullish chart, and we hit an all-time high and an all-time closing high right there. So the action is showing that the bulls have the upper hand right now. As far as market breadth, I showed this in the past. There was a divergence between this advanced decline line. There was a divergence between the advanced decline line and the price of index itself, and you can see the index was making higher highs, pushing higher, but advanced decline line didn't catch up. But finally, this week, you can see it's an all-time high, 3011. So now the advanced decline line is confirming the price of index itself. In other words, the internals of the market, the number of stocks are moving up together with the price itself. So the advance is broad-based. And then the momentum of the breadths is not terribly inspiring, but it's positive nevertheless. It's somewhat like a kind of like a slow but progressive move forward, move upwards in prices. And our trigger signal happened on May 8th. That's the latest one, but there was a bunch before. So a buy signal was on May 8th, and we re-entered the market together with other funds, by using other funds as well. Next is QQQ, PowerShares QQ Nasdaq 100 ETF. So this represents a 100 of the large cap technology stocks. Very similar picture, maybe somewhat stronger than the S&P 500. It hit an all-time high in end of April, corrected since then, and then rebounded again. So this on Thursday right here is an all-time closing high, and an all-time closing high as well. As far as the advanced decline line, you can see that there was no divergence. There was an all-time high here, and we're pushing very close to all-time highs as well. Similar picture with breadth momentum. It's positive, but it's just barely so, and it's kind of in between. You can see it's kind of just going back and forth here. It's not very strong. In other words, the direction of the breadth is not very strong. Here you can see it was nice, strong, clean move up, and we had nice move up here as well. But here it's more like just slow and steady grind higher. So another interesting market I thought I would share this week as ASHR is a China 300 ETF. Just a tremendous move up. This is about 45% move, maybe a little less, 44% or so, in just a few months, from March till now. very strong move, very bullish. You can see that SCTR, stock chart technical rank, which ranks all of the ETFs against each other, it's at 99.6. So it's very strong ETF right now. And if it pulls back and the CTR continues to be in the upper 90s or above 90 at the very least, I would consider entering this ETF again. Right now it's just way too overbought for my taste. I'm sure it will correct at certain point. I don't know from which level, but it just makes no sense for me to buy at this elevated prices. So I'll be waiting for a possible retrace to the 50-day moving average, and then something like this, similar to this picture. It was a nice strong move up, and then kind of corrected to the 50-day, and then this was a better, much safer entry opportunities here. On the flip side, 10 solar ETF, also a very strong ETF. You can see the stock shares technical rank was above 90, and we actually re-entered the market right here around the 50-day moving average. But you can see it's very unusual for an ETF, for a fund, to gap down so much. Look at this. It's about 9%, 10% gap down. This happened as one of the Chinese solar stocks, Han Energy, basically stopped trading after a 47% plunge within seconds. It was somewhat similar to the flash crash situation that we had in America as well, but here it was just for one stock. And this particular ETF, solar Guggenheim Solar ETF 10, at this point, right before the crash, had around 20% of its holdings in Han Energy. So this gap down weighed heavily on the ETF as a whole. And this again shows that it's important to kind of look under the hood of the ETF and see what's inside this ETF, what is the composition. And that's the other reason why I like to use, for a semiconductor ETF, I like to use XSD versus SMH, because XSD is very diversified versus SMH, where about top 2 holdings account for like 30% of the ETF. So that's exactly what happened here. All right, next is bonds, TLT, 20+ year Treasury bond fund. So it's obviously under pressure. We had a strong sell-off, a rebound, and another strong sell-off with a lower low, and another lower low. So very, not a very pretty picture, but nevertheless, it's still a bullish security. This is a 200-day moving average, and this is a 50-day moving average, so 50 days above the 200-day. And at this point, it's very oversold, so I think this is a rebound in the making already. And now the important thing is for bonds to, if you're a bond bull, and I'm still a bond bull at this point, we will see if, so there's lots of now overhead resistance. First, there is resistance right here in the 200-day moving average. That's test number 1. So if it comes up to the 200-day moving average and fails here, that is a very bad sign. And also this level right here kind of corresponds to the 200-day moving average. So another level here is from this gap down and from these levels at 125, and then right here at the 50-day moving average. So lots of overhead resistance. If it manages to kind of come up to the 50-day and maybe close above it and just stay there for a little while and then maybe resume its uptrend, that will be very constructive for bonds. But at this point, I'm still somewhat bullish. We just need to see if it clears these lots of overhead resistance. And next chart shows market timing, and we have an open position right here on May 15th that we opened in TLT. Okay, gold is next in the agenda. So last week I showed this big white candlestick. It's a very strong move here above this rough regression channel, and then it closed above the 200-day moving average for 2 days in a row. So I thought, could this be a genuine breakout? But then next day, look at this big red candlestick. It just plunged and negated this breakout. So for now, I mean, this is still a bearish security in my opinion, because you can see the 200-day moving average is above the 50-day moving average, and I use some other methods of determining if this is a bullish or bearish security, and they're still pointing down. So at this point, gold is somewhat overbought, and this may not be such a bad place to go short, which we actually did via GDX. So next, via DUST, DUST, I'll show next couple of charts. So as far as market timing is concerned, we had another short signal on May 21st. So you can see it's very choppy. We had a couple of short signals that didn't work out, and then another short signal just recently, yesterday. We'll see if this one works out or not. As far as GDX, gold market vectors gold miners ETF, first there is this rough channel that I drew in, and it looks kind of like a rising wedge after a big breakdown. So a rising wedge after a big breakdown is usually a bearish pattern once the wedge is broken. It hasn't been broken yet. I thought here that was a wedge break, but it pulled right back, and it didn't close it below the 50-day moving average. So it looks like this could be coming very close. So we can see if we close below this line and possibly below the 50-day moving average right here in red, this could be especially if GDX closes below this low at 1928, then we could easily see a retest of these lows and possibly go lower as well. Stock chart technical rank again came up pretty high. Actually, it was in the 90s, but once again, this is a relative rank, and it just means that it's either that it's not necessarily that GDX itself was strong, is that other ETFs at this time period were not as strong as they used to be, maybe. Similar picture here, you can see it came up and then just collapsed again. So right now we're kind of at 21. It's not terribly weak, but then again it's still in the bear territory. As far as market breadth for GDX, continuous bearish divergence. You can see prices made higher high, but as far as advanced decline line, advanced decline volume percent, unbalanced volume, we're just having a hard time breaking out of this downtrend. And now bullish percent index for this ETF started dropping again. It was in the 40s, and it's kind of respectable, but now it's back in the 30s. So in other words, if you follow point and figure charts, then only 30% of the ETF is now on the buy signal. And you can see also new highs, new lows indicator. You can see that new lows have started to appear again. As far as market timing, similar picture. See, we had two signals that didn't work out, and we'll see if this signal works out this time. Next on the agenda is USO, United States Oil Fund. So, pretty impressive move from the March lows. Ran into some sort of resistance around $21 right here. Pretty nasty candlestick right there in the middle of May, in beginning of May, rebound again, and another gap down on, I believe this is Tuesday. So there was a gap down and continued lower. So this was, to me, looks like a support break. And this event also triggered a short signal per hour trading system. I'll show in next chart. It rebounded. It did rebound since then. So we are seeing, if we continue higher from here, then potentially this breakdown would be negated. But my money is on the short side, and I have an open position in SCO, which is a inverse ETF for United States Oil Fund. So next chart shows a short signal which was generated on May 19th. Last time, by the way, the short signal worked out really well right here as well. And finally, we will close off with United States Natural Gas Fund. Like all commodities, or like most commodities, it's in a downtrend. Hit an all-time low, possibly an all-time low here. I'm not sure if it's just a 52-day low, possibly. Rebounded pretty sharply. This was about 20% move or so, and then right here we can see a small black candle and then a big red candlestick. So that's bearish engulfing pattern right there. Next day it was confirmed with a close below this low, and then kind of small rebound, and then another plunge down. So on a Friday this was pretty severe selling right here, and our signal was triggered indeed. Short signal was triggered for United States Natural Gas Fund. So right now it's very oversold on the hourly charts. So I'm thinking there will be a rebound, I'm guessing, to this area around 1480. And then if it rolls over here, not a bad place to go short in my opinion. Okay, next chart, this chart shows UNG, same thing, short signal generated today on May 22nd. There's a short signal. Last short signal was back then, and it was a very productive short signal. All right, that's it for this week. Please do visit us on the MasterChartsTrading.com, and if you have a go to public charts and social page, and we have the links there to Facebook, stock charts, and Twitter account, and also a YouTube account that we have information there, and you can read us information there as well. Sign up for our trade alert services, or rather for our mailing list, and then trade alert services that are hopefully upcoming soon. Okay, thanks for listening, and have another great trading week. Bye-bye.